Hey friends, so this is Alfred. I'm here to celebrate a new beginning and walk you through my new classes. What I'm going to do every week is we're going to put together this, what I'm going to call this foundation class, right? This is going to be why credit matters before you buy a home. This is going to be super important. I'm going to walk you through the journey starting this week and the weeks to come, which is going to help provide you with key elements in your home buying experience, right? We're going to call this my podcast here, this journey we're going to call it is from credits to keys. That's the idea. We want to walk you through every element and help you get to a position where you're going to be able to confidently go and apply for a mortgage so that you can get your dream house. That's what we're all about. That's what we're going to do here, and that's what I want to walk you through the process, right? So I'm excited to start this journey with you. Every week, I'm here to help you build financial habits, strengthen your credit, and get you ready to buy your first home, or maybe it's your second home, or maybe it's your third home. But that's the idea. So I'm constantly active on YouTube and Instagram. If you're new here, go ahead and just follow me on Instagram and just subscribe right here to this channel because we're going to talk all the time, always about how to prepare yourself for your financial journey so that you can get that home. So if you've ever felt like owning a home and you thought that maybe it's out of reach because of your credit, maybe your debt or your financial mistakes, this podcast is going to be for you. We're going to break the things down step by step so that you can understand the process and feel confident walking into that lender's office one day and get a pre-approval. That's what you want. You want to get the pre-approval so that you can put yourself in a position to get what you need and get your goals and help you and your family. So today's topic is why credit matters before you buy a home. Why credit matters before you buy a home. So a lot of people think that the first step to buying a house is talking to a realtor or finding a lender. That's what most people think of, right? They need to go find a realtor, they need to find a lender. Lo and behold, that isn't really the first step. That's not the first step. Those are steps, but it's not the first step. The first step starts before all of that, and it actually could be months ahead of that. It starts with your credit foundation. You want to be sure that your credit is going to be in a position so that you can get the home. There's no need to be looking for a home if you can't even qualify for the house or even looking for a realtor or looking for the neighborhood or the city that you're trying to be, that you want to live in. Your first step is to make sure that your credit is in position so that you can qualify. So let's go over the main topic. I'm going to talk about what credit really represents. So let's start here. What exactly is credit? And I get this asked all the times. I get people asking me, why does it matter? What is it so important about your credit? And then you hear coaches on the other side that you shouldn't even have a credit, right? But I'm here to teach that you should. Your credit is basically your financial reputation, honestly. It tells lenders how you've handled money in the past, and it gives them an idea of how you'll handle money in the future. And your credit report, that's a collection of data. This is what your answer is. This is who you are as far as your financial position. It shows your payment history. It shows your balances. It shows the length of your credit. And it even often shows you when you apply for credit. All of these combined gathers up together to show you one thing, which is going to be your credit score. Your score is it defines your credit history. It defines what your makeup is as far as your credit is concerned. So number two is we're going to walk through is how credit impacts home loans. Super crucial if you're in this position. Here's why it's so important. Your credit score directly affects how much your home will cost you. For example, let's say two people buy the same house. Let's just say a $350,000 house. One person has a credit score of 620. Okay, keep that in your mind. One person has a credit score of 620. Another person has a credit score of 740. The one with the 740 might get a 5.5 interest rate, while the other one with 620 might get a 7.2% interest rate. That difference can up to over $80,000 over the life of the loan. just because of their credit score. Does that make sense? 640 will most likely qualify for a score of around 7.2%. 620 credit score, you you probably will qualify, but it's going to be, I'm sorry, I said it backwards. 740 might get you 5.5%, while the 620 is going to get you 7.2%. That's a huge difference. So having great credit isn't just about getting approved, it's about real savings, real money every month for the next 30 years. Number three, the three C's of credit worthiness. You see, when lenders review your credit application, they're looking for what I like to call the three C's: character, capacity, and collateral. Let's talk about those. Character, which is your payment history. Do you pay your bills on time? That's going to reflect who your character is. Capacity, which is your debt to income ratio. Meaning, in simpler terms, how much debt do you already carry compared to what you earn? Does that make sense? If you earn this much, but your debt is way up here, it doesn't look good. But if you earn this much and your debt is way down here, that's what they like to see. And then the third C is going to be what I like to call is collateral, which is the home itself, the thing you're asking the bank to finance. The house is going to be the collateral. You can't always control the collateral, but you can control your character and your capacity, right? That's what you can control. Paying on time and keeping debt low goes a long way towards showing the lender that you're ready. And that's what you can do. You have that ability. You have that's something you can control. Now, the number four item we're going to talk about is common credit mistakes people make. Now, let's talk about some of the mistakes I see all the time that hurt people right before they're ready to buy. We're going to go over these four. The first one is maxing out credit cards. Even if you pay them on time, using too much of your available credit can drop your score fast. So my goal, I teach my clients stay 30%, at least 20 to 25 is going to be even better. So what that means is if you have in simpler terms, if you have a credit card with a $1,000 balance, you can use all of it. But when it's time for that credit card to report the balance, bring the balance down to at least $300, 200 even better. That's going to be between 20 and 30%, and that's going to look good when you go apply for a loan. Now, the number two is co-signing for others. I know it feels good to help family and friends, but if they miss a payment, your credit takes a hit. So keep that in mind. That's what we call co-signing or authorized users. Sometimes it's good, sometimes it's not. Be wise if you need to go to that route. The number three is going to be what is called ignoring small collections. That $75 phone bill from 3 years ago can show up and drag your score way down. That's what we call a collection, something that you may not even know about is on your credit report. We need to take a look at it. We need to see what's on it so that you can be mortgage ready. The number four is going to be applying for too many new accounts right before the pre-approval. You want to stay away from applying for any other thing that is going to give you hard inquiries and that can temporarily lower your score. So you want to be wise of that. You want to be cognizant of what's going on. You're getting ready to apply for a loan. Keep your credit profile smooth, keep it clean. The key here is awareness. You can't fix what you don't know. That's why checking your reports regularly is a step one in my opinion. So the number five thing we're going to talk about is where to start. So where should you start if you're serious about getting ready to buy a home? Step one is to check your credit reports. You can go to myfreescorenow.com and pull all three for cheap, almost little nothing, and you're going to get Experian, Equifax, and TransUnion. I can help you. I'll leave the link down below where you can go there and you can get your report from all three bureaus up to date. Step two is you're going to want to look for errors or outdated accounts. Make sure everything is accurate. If you're already in my program, we do this for you and we start the dispute process if there's anything wrong. So keep that in mind. If you need someone to walk through your credit report, and help you walk through this disputing or a tackle into the negatives. That's what we do. That's why I'm here. I'm here to tell you what we do, but I'm also here to teach you that this is something that you can look forward on your own. Then the step three is going to be set a goal. Maybe your goal is to get into the 700s, or maybe your goal is to pay off one credit card at a time at a certain date. Give yourself a target and it'll keep you focused. So let me just share with you a quick little story that I've had recently. One of our clients, one of our members. So a client of mine, her name is Maria. Actually, it's not, but I don't want to give out her real name. But let's call her Maria. She came to me with a 580 credit score. She was a single mom who wanted to buy her first home. She had two children, but she had a few old medical collections, a couple of other negative items that were on her report. She had some old credit cards that were lingering around. Wasn't good. They were negative. So we started small. We cleared up all the negative accounts. We helped her open secure credit cards, and we coached her on how to use it correctly, right? There's certain process, certain things you want to do. We have the resources for that. And within 6 months, I mean, really, in the grand scheme of things, your whole life, 6 months isn't that long. Within 6 months, we got her into the low 700s. Then she was able to go and find a realtor, find a loan agent, and she was pre-approved for the first time at a home that she can buy all her own. And she bought her first home. That's why I love doing what I do. Because when you take control of your credit, you take control of your future, right? Having a home for her and her children meant the world to her. It meant the world from renting from apartment to apartment, finding out where she's going to be from month to month, wondering where she's going to be, and to now she's in her own home with her children, living a life that she's always wanted. So let's go over a couple action steps that I'm just going to share with you today. A couple of things I want you to maybe if you can, if there's anything you can leave with this video with my first edition. Now I've been in the YouTube for quite some time. I've had other channels, I've had other things that we've talked about. I'm more active nowadays on both YouTube and Instagram. On Instagram, I have over 1,000 videos, so you can go there if you haven't already. But I'm going to start posting these longer videos here on the YouTube. As you know, YouTube is more friendly to longer videos, and Instagram is more friendly to short, quick little snippets. They both have their uh, advantages, but from now on, I'm going to spend the time. I'm going to spend the time weekly. And I'm going to post these long videos for teaching you if you're already a client, or for teaching others that are not a client that just need some guidance where to go. And I hope I can bring you some enjoyment, some teaching ability, and action steps. For example, I want you to leave with a few quick action steps for this week. Number one action step is pull your latest credit report, and review it line by line. Highlight anything that looks off. Just print it out. I'll leave the link below where you can get one. All three bureaus. Print it out and just go through it. Highlight any item that looks uneasy, that doesn't look right. Make a list of all the negative accounts or debts that you want to address, right? You see your name that is wrong, it happens all the time. If you see an address that you never lived there, highlight it. If you see anything that an old account that you thought should have been resolved, highlight it. If you see some late payments and you're confident you didn't make a late payment, highlight it. If you see a charge off that shouldn't be there because maybe you paid the balance, highlight it. And just put that on paper. Pick one small action to take on this week. Maybe it's paying one account at a time. Maybe it's lowering your balance by a few percentage points, or setting up auto pay so that you never miss a payment. Those are key things that'll help you. Auto pay is huge. I use auto pay. Those are your three things. Easy. Pull your latest credit report. Link is down below. Make a list of just the negative items. You can highlight it. Just print it out, highlight it, and then pick one small action to accomplish this week. Remember, small steps add up to big wins in the future. I tell this to my clients all the time. One negative that was reversed to positive is a huge win. The next month, one deletion is a huge win. The third month, two deletions, five updates. and on and on and on. Before you know it, you go from a 550 to 700. It's a journey that is well worth it. It's a journey that to stay focused, keep your eye on the prize. Small steps add to big wins. You don't have to fix everything overnight. You just have to start. That's the main thing. If you don't start, then you're never going to fix anything. So we need to get you started. All right. So that's what I have for episode one, which is called From Credit to Keys. Just the basics. I hope this is something that empowers you. I hope this is something that you've learned. I hope this episode helped you see how powerful your credit really is when it comes to owning a home. The good news is no matter where you start today, you can always rebuild it. If it's like fixing a car. You take a car to a good mechanic, it can be fixed. Cars break down all the time. Credit happens. Bad credit happens. I know that. But it can be fixed. I just had a conversation with a client. Do not be dismayed. Do not be discouraged. We can fix your credit. We can put you in a program that can help you guide you through the process and get you where you need to be for whatever your goal is. That's another thing. Write down your goal. Write down your goal and where would you want to be a year from now? Are you in an apartment? Would you like to be in a house? Are you thinking about starting a business, but you want to get some funding? Are you thinking about moving your family and your home somewhere and you just need a bigger home? Something along those lines. It's always we need to start. You got to start. You got to start somewhere and it's never too late. The good news is no matter where your score is today, you can always improve it. So if you found this helpful, I hope you did. Make sure you subscribe to my YouTube channel. This is it, Alfred Credit. Leave a comment and share this episode with someone who is also working on their credit, looking to buy a home. And if you're ready to take that next step, you can visit my website, summitbeacon.com. You can message me directly. I'll help you see exactly where you stand and how to start moving toward that dream home. That's what I'm here for. I'm going to start posting more often. I post every day already, but I post shorts. I'm going to start posting some long versions now to help you to be informed. So remember, strong credit builds strong futures, and it deserves you, right? It deserves yours. Strong credit builds strong futures, and you deserve your strong future. I'll see you next week for episode two. And in episode two, we're going to dive into how to read and understand your credit report. You won't want to miss this. I'm going to teach you and show you how you can read and understand your credit report. Your goal today, this week, was just to go ahead and download it, walk through it, do your best. Next episode, I'm going to show you how to read it and understand your credit report. Again, you're not going to want to miss this. So thank you for watching. Like, subscribe, you know the thing, and we'll catch you next time.